Hi everybody, this is Steve here again from Shirt Trading. In today's video we're going to have a look at SPP or the Spar Group and decide whether or not it's a good company to invest in. But before we get into that, I just want to say that neither myself nor Shirt Trading are registered financial services providers, so everything I say in this video must just be taken as my own opinion and not financial advice. If you like what you've seen in our previous videos, please give our channel a subscribe as well as liking this video, as it just helps us to get our content out there. As always, if you look at the description below, if you're watching on YouTube, there's links to our website where you can have a look at our services, as well as our Telegram channel where you can get free tips and trading advice, and also links to sign up for a Velocity Trader demo or live account. So let's get straight into it and see what the Spar Group is all about. Okay, firstly, as you can see, as always, I'm on their website just to get a bit of an idea of what they do. So just have a look here. Since listing on the JSE in 2004, the group has shown solid growth in earnings, dividends and value per share as a result of a diverse geographical footprint. Supply chain efficiencies achieved through our procurement, warehousing and distribution competence, the success of their independent store ownership model, a strong leadership team, and the benefit of an international sharing and governance network. So we basically know what Spar is about. It's a grocery store chain. To get more of an idea of how big they are, let's just go and have a look at their investor relations. As you can see here, there's an overview of where the stores are based. If I'm not mistaken, the Spar Group was originally a Dutch company, and they listed on the South African Stock Exchange in 2004. So they have stores in Ireland and Southwest England. They have 1,391 stores. They also have stores in Poland, 219 stores, as well as 333 in Switzerland. And then Southern Africa, obviously, what we are most interested in. They have 2,414 stores. They have 4,500 employees, and their brands, we know them pretty well: Super Spar, Spar, Topsit Spar, Quick Spar, Spar Express. Build It is one of their brands, as well as Pharmacy at Spar and Save More. So let's first go and look at the chart and see what it's doing from a technical aspect. So as always, we're on the Velocity Trader platform. Like I said at the beginning of the video, if you would like to try out the platform with a demo account or just go straight into trading with a live account, you can find the link in the description below. We're on the week chart over here. We're going back to 2011 down here, and as you can see, their lows in 2011 were around 82 Rand a share. They went quite nicely up all the way to 2015, and then from there onwards they've been in a pretty sideways movement all the way to today. Their highs were in 2018. They're around 225 Rand per share, and currently we're trading at around 201, 202 Rand per share. Let's go and have a look at the fundamental side and see the health of the company in order to make an analysis on it. So as always, we look at the company's past performance to see if it's had increasing revenue, earnings and cash flow. So let's start with the free cash flow. Back in 2015, they had about 1.1 billion Rand per year of free cash flow. It went up quite nicely all the way to March 2019, where they were at 3.17 billion a year, and then a massive dip down to 17.4 million Rand a year. So they had a very, very bad year, and then slowly started climbing up. 3.308 million Rand per year, and then all the way into the end of 2020 they were back to 3.84 billion a year, and they've been pretty stable since then. Their earnings have been pretty good since December 2014. They started off at 1.415 billion per year profit margin, and they're currently sitting at 2.511 billion rand per year profit margin. And their revenues have been on a nice steady incline, not an extremely fast incline, but going up nonetheless. 59 billion per year in 2014, and now they're looking at around 128.769 billion per year, and that was in March 2021. So the revenues are looking pretty good. Next, we have a look at its debt situation versus its equity and cash flow. So let's have a look at its cash and equivalents first. 353.1 million back in 2014. Had a nice peak year of 2.04 billion mid 2016, and then they've kind of been going up and down since then, currently sitting at 1.756 billion in cash and equivalents in March 2021. Their equity has seen a nice growth since 2014. Started off in 2014 with 3.152 billion rand in equity, and currently at 7.626 billion rand in equity. If you add the debt onto that, you can see their debt has also been rising kind of along with their equity. They had a big hike in debt over here with 10.387 billion rand in debt in 2019. It went slightly down again, and currently at 11.419 billion rand in debt. So they have 149.7 debt to equity ratio, which is not a great debt to equity ratio. Let's have a look and see what they say down here. Yeah, so their debt level is 149.7, which is considered high. They haven't been reducing their debt. It's actually increased over the past 5 years. It was 130.3, and now it's 149.7. However, their debt is well covered by their operating cash flow with 45.4%, and their interest payments are also covered at 14.1 times. And then the final thing we have a look at is the valuation of the company. We check to see if its intrinsic value is lower or higher than where it's currently trading. And yeah, we see the Spar Group is currently undervalued compared to its fair value and price relative to the market. It is greater than 50% undervalued compared to fair value. So let's have a look over here what they say. The current price is 199.67, and they estimate that the fair value would be at 447.33, which is undervalued by 55.4%. When the intrinsic value of a share is lower than where it's currently trading, that's a great sign for future growth. Let's go and have a look at the chart and see where the level of 447 would be compared to where the current price is. So yeah, we have the chart again. I've zoomed out quite a lot just so that I can fit my projections in. 447 would be somewhere around here. So this level over here is where the share price could potentially go. As you can see, it's quite far away. The price would have to more than double to get there, but it's a good sign for future growth. I would be inclined to wait for it to break through these levels over here, the highs that it formed a couple of years ago in 2018, before considering getting into a trade to ride it all the way up to this level over here. So judging by the technicals as well as the fundamentals, I would say the Spar Group is a good investment to make, bearing in mind that things can obviously change over the years, but as things stand at the moment, I think it could be a great share to invest in for some long-term growth. So let's go to our little picker wheel now and check what share I'll be looking at in our next video. So there you go. In the next video, we'll be looking at MEI or Mediclinic Group. We haven't looked at any of the healthcare companies listed on the JSE as of yet. So I think it'll be an interesting video to see what's going on in that sector. As always, thank you so much for watching, and I hope to see you in the next one where we have a look at MediClinic. Cheers.